Assalamu alaikum everyone. I am Mohammad Shad Khan, VAT expert. Welcome back to our YouTube channel, Sheikh Anwar Accounting and Auditing LLC. Today, we are diving into a crucial topic for anyone involved in the real estate in UAE, the value added tax treatment for the real estate transaction. Whether you are a developer, investor, or tenant, understanding these framework can save you time, money, and headache. So, let's break it down step by step. In this video, we will discuss about VAT treatments on residential properties, commercial properties, mixed use properties, input VAT recovery on real estate used for staff accommodation, specific exemption in the real estate, designated zone for VAT purpose, and deemed supply for real estate. First, let's quickly recap what VAT is. VAT is a consumption takes place on goods and services at each stage of production or distribution. In the UAE, it introduced in 2018 at the standard rate of 5%, but real estate transactions have unique VAT implication based on the specific regulation. Let's start with the residential properties. The treatment of VAT can vary significantly depending on whether it's the first supply or a subsequent supply. According to Article 45 of the VAT law, the first supply of newly constructed residential property, whether through the sale or lease, is zero rated for VAT purpose, provided it's made within the 3 years of the property completion. This means that no VAT is charged on this transaction. For example, if developer sells a new apartment to a homeowner within the 3 years of completing construction, then sale is zero rated, plus the developer can recover input VAT on that construction cost. So, what qualifies as a residential building? According to Article 37, Clause 2 of the Executive Regulation, it must be intended for use as principal place of residence. This includes facilities like parking and gardens. However, properties like hotel or service apartments are excluded. Leasing of residential property is exempted from VAT unless it's first supply. Next up, commercial properties. This category covers offices, shop, warehouses, and more. Sale of lease commercial properties. In this, sale or lease of commercial properties is subject to 5% VAT as outlined in the article, means VAT paid on maintenance, utilities, and legal services can be reclaimed as per Article 55 of VAT law. Now let's talk about mixed used properties. These properties serve both residential and commercial purpose as their VAT treatment depends on the usage proportion. VAT treatment of mixed use proportion, the commercial property of a property is subject of 5% VAT, while the residential part may be zero rated if the first supply or exempt if it's a subsequent supply, as per Article 31 of the Executive Regulation. Imagine where the ground floor has shops and the upper floor are residential apartments. The shop will attract a 5% VAT, while the residential unit will either be zero rated or exempt depending on their supplies status. Let's look in input VAT recovery for different type of real estate. For commercial real estate, for businesses involved in taxable supplies, input VAT on construction, maintenance, and services charge can be recovered as per Article 55 of the VAT law. However, for the residential real estate, input VAT cannot be recovered on expenses related to exempt supplies, but it can be recovered for the first supply or of a new constructed residential building, as detailed in Article 54 and 55 of the VAT law. Now, let's talk about real estate used for staff accommodation. If a business provides residential property for its staff, the VAT treatment depends on the agreement supply of the employees. If the accommodation is provided for free or below market value and input VAT was claimed, it may be considered as deemed supply, which could attract VAT. This is addressed in the Article 45 of the VAT law. There are also specific exemption. The sale or lease of bare land is exempt from VAT, defined as land not covered by any building. However, if there are partially constructed building, VAT applies as stated in Article 46 Clause 4 of the VAT law. Furthermore, properties sold or leased for charitable purpose may also be exempt from VAT under Article 46 Clause 3 of the UAE VAT law. Some areas in the UAE are classified as designated zone where special VAT rules apply. Goods and services supplied within these zones may not attract VAT if certain conditions are met. However, real estate services within these zones typically follow standard VAT rules as noted in Article 51 of the Executive Regulation. Lastly, if a taxable person uses real estate for personal purpose and has claimed input VAT, this may triggered as a deemed supply. This means VAT may be payable based on the market value of the property as per Article 11 of the VAT law. In the conclusion, the VAT treatment on the real estate in the UAE is complex, depending on whether the property is residential or commercial, the type of supply and specific exemption. It's crucial for the businesses to stay compliant with the VAT regulation to avoid any penalties. Thanks for watching. If you found this video helpful, give it a thumbs up. Don't forget to subscribe for more updates. And if you have any question, drop them in the comments below. We are here to help you and navigate the world of VAT. See you in the next video.